Welcome back to the Retire Young podcast. Don't forget to subscribe to the Retire Young podcast on Apple Podcasts, iHeartRadio, and Spotify. It's the Retire Young radio show. If you're a first-time listener, thanks for stopping by. I am your host, Joshua David, and we are happy to have you with us today. Alongside me, actually, there's nobody next to me. Al is on phone today. He's hunkered down in his bunker today. Al, how you doing today?
Yeah, I'm in my bunker, in my corona-proof bunker. I'm doing very well. How about you, Josh?
That's good, Alex. It's good you're safe at home. It's always great to be back helping our Retire Young family make better investing decisions. One of the things that we do here, and we've been talking about this for quite some time, is we are stressing the need for financial literacy. We're raising awareness to financial illiteracy worldwide. And there's a lot of different things that are going on right now, especially with these financial markets, a lot of due to the cause of this coronavirus that we're having. But there's a lot of things going on as well. We have stimulus packages that the Fed and the government are trying to pass to help this economy. There's a lot of volatility. We're seeing circuit breakers numerous times per week. We're seeing lock limits up and down, which I have never seen before. But Al, with all this volatility and all the things that are going on right now, what are you doing right now? Because you're helping a lot of people become, I guess we'll say, comfortable participating in these markets. What are you doing right now to help them be comfortable but also confident taking part of these markets?
Yeah, when we got this kind of activity, it's hard for people to have that confidence. And that's really what we're going to concentrate on. But this really has been like a roller coaster on steroids. Most of us that have been in this business for a while, unless you were in it in 1929, you've never seen anything quite like this.
Are you sure you weren't around then?
I know I was not around.
Oh, okay. Even though you're far away today, I can still give you a little bit of crap.
Yeah, I kind of opened the door for you on that one. But and it's important to remember that this whole debacle that we're going through right now didn't start as an economic issue. It started as a medical issue. And this economy was and still is the strongest economy in the world. And people all over the world are once again going to come back and look to this market or these markets for their investments. So, don't be discouraged. I know it's hard. It's easy for us to say that. It's easy to say don't panic. But there's three words that should not be part of your trading plan. One is hope, one is wish, and the other is panic. And, my concern is that a lot of people are going to be looking at the market now as kind of a villain because when they look at their 401k statements or their portfolios, they're going to see that they've lost some money. But, financial illiteracy, which is what we talk about in the show, has resulted in, millions of people not understanding the markets, not understanding how to manage risk, how to take advantage of opportunities in these different directions in different market conditions. And we talk all the time about the three different market directions. And I think because of what happened in the last bull market, people got kind of complacent and didn't think that much about the markets going down. Well, that's no longer the case. And if people that are going to be successful coming out of this are the people that focus on the things that they can do. But first, you have to know what those things are. So it's critical to get the proper education, probably more important now than ever. It's not a time to bury your head in the sand and again, just hope and wish that things go well.
And that's a lot of people are conditioned to do that. A lot of people are conditioned to put their head in the sand because we've been told that by a lot of the media, the banks, and the brokers as well.
Well, exactly. And the old standby is to do that buy and hold strategy where you put together a portfolio and then you don't worry about drawdowns or bull or bear markets like we're going through. Well, that's it's maybe easy to say when the market's going up, but not so much when it's going down. And unfortunately, buy and hold for a lot of people ended up being buy and fold. And what happens because of emotions, because we're human beings, the panic, the pain takes over at some point, and a lot of people probably got out of the market near the bottoms, if this is, in fact, a bottom. But understand also that not every company that saw its stock price head for the basement deserved it. When we go through corrections and crashes, the correlation between stocks becomes so great that basically everything gets kind of set down. Sort of like pulling a plug on a bathtub. You can't point to a section of the water and say, don't go down. It's all going to go down. So is the basement a bad thing? No. Look at it as being the bargain basement. Who always talks about buying in the bargain basement. It's Warren Buffett. So he's at the checkout counter now. Warren Buffett has been sitting on $128 billion of cash waiting for, unfortunately, I mean, he didn't want it to happen like this, but he was waiting for values to be present in the market, and that's what he's seeing now. So there's a lot of Wall Street traders, a lot of professionals, a lot of institutions that are getting ready and going to participate in what might be the ride of their life. So how do you do that? Well, you have to understand, again, how the markets function. What causes price to change? What causes new trends to start? And we have been taught by Wall Street that we need to look at fundamentals, really do an analysis of a company before you get into it. Well, we see with these, I mean, we're going through 1,000, 2,000 point swings in a day. That means the market can go up several hundred points, down several hundred points, back up several hundred points. The fundamentals are not changing every time that happens. It's just buyers are coming in and sellers are coming in, and that's what moves the market. And that's one of the things that is part of the strategy that we teach our students. And they understand that the movement of price in any and in all markets is simply a function of an ongoing supply and demand equation.
And Al, that's kind of, that's kind of like that roller coaster that you mentioned, because it's just supply and demand. The markets are going to go up, the markets are going to go down, and they also go sideways, so they actually have three directions. And a couple other things too. You mentioned education. You have to have the proper education to make proper decisions in the financial markets. I mean, Al, you and I, we both meet with a lot of people, every single week. We talk, we're more so on the phone right now, but a lot of people are asking, what do I do? Well, action. You have to do something. You can't just put your head in the sand and do nothing, because if you don't do something, nothing will change or nothing will improve. Al, we got a real big show today. We got an important show. What do you have coming up next?
Well, I started out by saying that this was a medical issue, not an economic issue, but it is going to be and will be an economic issue. There'll be some changes, and that's where the opportunities are going to be. So let's talk about that. Let's talk about what some of the different opportunities might be going forward.
Thanks for listening to the podcast. Don't forget to check out our website at retireyoungaudio.com.